This week, how will a federal government shutdown impact HECM lending? It's a timely question as Congress is once again at an impasse which began on October 1st. We're going to look at the previous shutdown and what we may expect until we see a compromise has been reached. We'll do that right after this short message from our sponsor.
Liberty Reverse wants to help you grow your reverse mortgage business with our proprietary Equity IQ product suite. Equity IQ gives your borrowers access to more funds, lowers their upfront costs, and expands eligibility for home purchases. Learn more at partners.libertyreversemortgage.com today. This ad is intended for mortgage professionals only and is not a consumer solicitation. PHH Mortgage, doing business as Liberty Reverse Mortgage, is an equal housing lender. NMLS number 2726.
Welcome back to the Industry Leader Update. Well, here we are again. As of the taping of this episode on October 2nd, a federal government shutdown was in full effect. So how will this impact HECM lending? While every shutdown is unique, we can learn much from the last major episode. That is the 35-day shutdown that stretched from the 22nd of December 2018 through January 27th, 2019. That event remains the longest U.S. government shutdown in history, and its effects on our industry were both felt immediately and in the months that followed. So today we're going to revisit what happened in the previous shutdown and what industry leaders and originators were saying at that time. Also, the lessons that we can carry forward should this shutdown continue. In early January 2019, FHA HUD official site warned the Office of Single Family Housing will endorse new loans with the exception of home equity conversion mortgages, HECMs, and Title I loans under current multi-year loan guarantee commitment authority in order to support the health and stability of the U.S. mortgage market. Also at that time, Reverse Mortgage Daily reported bluntly, reverse mortgage endorsements have ground to a halt. FHA did clarify that HECM payments to existing borrowers would continue uninterrupted and refunds on mortgage insurance premiums would still be processed. Now, case numbers, they could still be assigned through FHA Connection during the previous shutdown. But the final step, that is the endorsement of the HECM and insurance, that was frozen. And this created a bottleneck. Originators could still take applications, order appraisals, and yes, in some cases, even close loans. But without FHA endorsements, lenders were left holding uninsured loans, a risk that few wanted to take if the shutdown did continue to drag on. John Lundy of Reverse Market Insight summed it up clearly for RMD in 2019. We won't have any HECM endorsement numbers because none will be endorsed as long as the shutdown continues, barring some change in policy on that front. Lori Goodman of the Urban Institute pointed out the contrast between forward and reverse mortgage programs. It's interesting that basically FHA is not really doing any reverse mortgage endorsements, but the forward program is proceeding. So the originators can do delegated underwriting. That meant that the forward industry could keep some semblance of flow while the reverse mortgage industry at that time was essentially frozen at the insurance stage. Now, interestingly, at the same time, many originators told Reverse Mortgage Daily that day-to-day operations still felt somewhat normal, at least in the short term. Rich Pinnell in Redding, California said, "The shutdown hasn't affected closing yet, other than that the year is full of new contracts looking for new options in their retirement years." Michael Mazursky echoed a similar sentiment. "It's business as usual from what I've observed. We get the case numbers same day, and closings have not been held up. I was kind of surprised, too, that there isn't more of an effect with the shutdown. At least it seems that way for now." For many originators, the real disruption came not at the front end of the process, but rather at the back end, where HUD's signature or the endorsement was the missing piece in the HECM transaction. And that lagging impact was reflected in the comments of Reverse Market Insight founder John Lundy in January 2019. Analysts warned that this pause would create ripple effects once the shutdown ended. HECM loans can be insured as late as 6 months after closing, but lenders may consider limiting their risk of uninsured loans much earlier if there's a long shutdown. In the simplest case, we'd be seeing a backlog of HECMs caught up in the month or months following to an end of a shutdown. And that's exactly what happened. When the shutdown did end in late January 2019, HUD moved quickly to clear the backlog of unendorsed HECM loans. In February 2019, endorsements spiked more than 140% when they cleared the backlog compared to January as it was flushed through the system. And the data during those months became nearly meaningless. I remember this as the measure of true market demand was hidden. And that catch-up effect not only skewed month-to-month endorsement numbers, but it also complicated quarterly comparisons, and it made it much more difficult for industry watchers to interpret the underlying demand for the consumer. So what can we learn from the last government shutdown? Well, first, borrower payments on existing HECMs continued without interruption because those funds flow from servicers and HMBS investors, not from HUD. Second, endorsements, the lifeblood of liquidity for new loans, stopped cold. And that created risk for lenders and investors that can jam the pipeline if the shutdown does drag on. Third, the industry must prepare for data whiplash. Low endorsement numbers during the shutdown, followed by artificially high surges once that backlog clears. And finally, counseling agencies and HUD customer support functions also felt the strain, and that created delays and uncertainty for originators and borrowers alike. As we watch the current budget debate unfold, the lesson is clear. A short shutdown creates delays and headaches, but a long one can choke HECM lending at its most critical point, FHA endorsement. And even after the lights in Washington do come back on, the aftershocks can echo for months. Now, what are your thoughts? Leave yours in the comment section below. Also, if you'd share this video on your LinkedIn network, thank you for doing that. We do have a YouTube channel. Be sure to subscribe and hit the notification bell. That way you never miss any of our latest episodes. Each and every week, we curate the most recent reverse mortgage news and stories in our weekly podcast, HECM World Weekly. You can listen and subscribe on Apple Music or Spotify, and we also have a video edition as well. Thanks again for joining us, and be sure to return next week for more reverse mortgage news, commentary, and analysis you'll only find right here at HECM World. Have a great week.